Today, Bitcoin and Ether move higher, and Gerry O'Shea of Hashdex breaks down the biggest potential catalyst that investors are missing in the second half of the year. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currencies are mixed this morning, with Bitcoin and Ether both on the rise by noon Eastern. Bitcoin managed to cross back above $119,000, while ETH rose to $37.30. Meanwhile, Solana headed lower, trading at $188. All right, let's keep talking about markets for our main story. With all the headlines for crypto in recent weeks, like the Genius Act, I spoke to Gerry O'Shea, head of market insights for Hashdex, for his take on what it all means for investors and what we should be paying attention to in the second half of the year. So let's start with the big news we've been talking about for the past few weeks now, the Genius Act. There was a lot of excitement in the market in the run-up to its passage, but where are we now that it's made it across the finish line? Does it have an impact on Bitcoin's price going forward, even if the focus of the bill is about stablecoins?
So I think the Genius Act was the most important piece of legislation for this industry in its history. And it certainly will have knock-on effects in terms of impacting Bitcoin and the access to the digital asset ecosystem more broadly. So I think what we're seeing, though, is beyond just the tremendous regulatory and kind of legislative steps that are going on right now, is a lot of interest and demand for this asset class from investors, both retail and institutional.
Has all of the upside already been priced in for Bitcoin with respect to the Genius Act being passed into law?
We don't think so. So I think there's a good opportunity here. You know, we've been now for over 2 months. Bitcoin has closed over 100,000. That's a big deal. This is obviously known as a very volatile asset, a very volatile asset class. But what we're seeing is that, especially in light of the Bitcoin ETFs that have been around now about 18 months or so, that demand is staying consistent. They now have about 150 billion in those ETFs. And we're seeing a lot of interest, not just on the retail side, but also on the institutional side. So there, in addition to the institutional investors that are showing interest here and demand, there's also the corporations. So the Bitcoin treasury companies, the digital assets being used on balance sheets. This is something that's kind of emerged since those ETFs have come out. And I think it's really helping to kind of drive and push demand for things for Bitcoin, but then also for things beyond Bitcoin, such as Ethereum, Solana, those types of assets. Importantly, because they're the ones that help power these stable coins. So what we've seen with Ethereum's price recently, I think, is a lot of recognition that Ethereum is going to be playing a role in the adoption of stable coins now that we have this legislation in place.
Now, we're hitting the peak of summer, which is typically a pretty slow period for crypto, but there are a lot of potential catalysts, from regulation on Capitol Hill to crypto adoption on Wall Street, what you were just speaking about. So are the typical summer doldrums out of the question this year, or do you expect a bit of a slowdown?
It feels like there's never really a slowdown in the crypto space, and I think we have
historically this is a more depressed trading window, so we are seeing a departure from that for some of the reasons that you mentioned: ETF fund flows, this rise of corporate treasuries, both across Bitcoin and Ether. So certainly it's a different time than it was in years past, but we do tend to see this seasonal fluctuation. Or will that not be the case this year?
I think one thing that could prove that it won't be the case this year is just the activity around regulatory issues. So we have next week, July 30th, the Treasury is going to be releasing its report on digital assets. This is something they've been working on since the president signed that executive order earlier this year. So I don't necessarily think that's going to be a huge catalyst in terms of prices or anything like that, but it will give investors a much better sense of where the administration stands and how their roadmap looks for this asset class going forward.
I want to come back to another topic. One of the big stories this summer is those corporate crypto treasuries on Wall Street. It feels like a new one pops up every single day. What will the impact on markets be for those, especially if you're talking about dozens of companies raising capital to buy Bitcoin or Ether? And are we at the beginning of this pipeline, or are you having conversations behind the scenes with other companies that are considering this reverse merger with perhaps a zombie entity that's publicly traded, looking to kind of combine forces and go public?
Yeah, I think the devil's in the details with all of these. One thing that I think is very clear is that corporations are seeing Bitcoin and some are seeing other assets as being valuable assets to have on their balance sheets. And so there's different strategies that companies are taking. Some are holding Bitcoin for the long term. Some are, securitizing Bitcoin in other ways. And I think there will be different strategies as businesses try to differentiate themselves. But ultimately, we see this as a very big tailwind for this industry over time, because it's really just showing that this is something more than just a speculative asset, and that businesses and corporations are seeing tremendous value in holding Bitcoin on their balance sheets.
Now, on the flip side, are there any potential headwinds that you think people are overlooking in the second half of the year, or is it really just full steam ahead?
I think there's always going to be the risk of large geopolitical macro events. Bitcoin and certainly other crypto assets are traded as risk assets. Bitcoin has shown some characteristics as being a risk off asset. And I think we'll continue to do so. But I think there's certainly, depending on what's happening in the world, crypto will be impacted like every other asset class. And I think that will just be the case for the foreseeable future. What it means, though, from our perspective, is that it's really this Bitcoin and digital assets are really entering into the traditional finance system, and that's just increasing the regulatory aspects that we talked about earlier. All of these things are really helping to intertwine this emerging sector with traditional finance. And so while there are going to be risks going forward, like there are with any other investable asset, we think the most important thing is that that this asset class is really showing its staying power, and more people, both investors, businesses, and others, are demonstrating that they want to have exposure.
Now, is the crypto market still U.S. focused for the foreseeable future? I mean, it's certainly been that way since Trump won the election. A lot of action in the U.S., whether it's an executive order or congressional action, has been driving momentum in the industry. So is the U.S. where investors should be paying the most attention when it comes to crypto?
I think it's certainly where there's been the most activity recently. But one thing, Hashdex is a global asset manager. We have strong roots in Latin America, in Europe as well. And in Brazil, for instance, their regulators were very early in treating Bitcoin and other crypto assets as financial assets, and the investors down there benefited from that. The U.S. has been very slow to do that, as we know. And while there's been a lot of progress in the last, call it 8 months or so, there's still a lot of work to be done, and it's not something that can be done overnight. So I do think that the U.S. is slowly becoming the center of attention in this space, but it will take time for some of these things to play out. And again, Bitcoin is it's really the first truly global asset, right? So it's not something that is necessarily just specific to the US. But what is happening now in the US is we have such a rapidly changing regulatory environment, legislative environment, that all the pieces are kind of being put in place for the US to be very dominant in this space going forward.
One last thing real quick. What's the most exciting thing in the crypto market right now? I'm trying to think about catalysts that we haven't priced in. For a while, it was ETFs. You mentioned we're already 18 months into that flight. The rise of these Ether corporate treasuries, certainly a new trend that people are talking about. But what right now is maybe not on people's radar, but should be, and is an upcoming driver of market momentum?
Yeah, I think one thing that probably the average investor is missing is they might have heard of stablecoins, but what they might not appreciate is that the crypto networks that are powering these stablecoins. And so I do really view stablecoins as being a huge on-ramp to people getting exposure to Bitcoin and potentially other digital assets. And that's something that, we sometimes in our industry, we can be a bit in a bubble, and then you get out and have conversations with family or friends about these things, and you realize that they're not following this as closely as we are. And I do think the fact that as people start to use stablecoins and then appreciate that it's blockchain technologies that are powering these things, they'll get a greater appreciation for the asset class and be much more likely to want to invest in these assets over time.
Yeah, and I'm certainly thinking a lot about Ethereum coming up on its 10-year anniversary, and a lot of the layer 2 solutions that are built on top of it that are now powering so much of mainstream traditional finance. Also, a lot of fintech players are beginning to turn toward this tech. So certainly an interesting shift over to infrastructure. Thank you so much for joining us.
Good to see you, Mackenzie.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.